In this video, I'll explain how and why we decided to purchase our solar system and an interesting or unconventional financing strategy that makes it cash flow positive, meaning we actually are saving money from the very start at the moment of purchase and each month going forward. I will preface by saying this data is based off of our actual system, rounded just a little bit, and 1 month of data pre-solar and 1 month of data post-solar. So to start out, our system cost we were quoted for was about $18,000. That's if we paid cash or financed through the solar company. Now we elected to pay upfront on a credit card that had a 0% APR interest rate for the first 21 months. And doing so, we were charged a 3% fee. So the $18,000 system cost us upfront $18,540. And as mentioned, that gave us a 0% interest rate for 21 months. And what I've done in this spreadsheet down here is every 21 months, I'll account for doing a balance transfer to a new 0% interest credit card to be able to keep that same interest rate every 21 months, and that's why I've highlighted those cells in red. Now our average bill pre-solar was $130 a month, and our average bill with the solar panels is about $45 a month. You still have a connection fee, and if you use electricity at night or more than your panels are producing, you're still going to have a bill. There is a 30% tax credit that we qualified for. So 30% times the 18,540 system cost is a upfront tax savings of $5,562. Now, this is money you could get back when you file your taxes. We elected to just reduce our withholding from our paychecks, so we got all of this money within the first 6 or 7 months because we were withholding less from our paycheck. So keep that in mind because that'll come into play later. So essentially we got this money up front within the first couple of months because we didn't have to pay it in taxes. Now, the way that a 0% credit card works is your loan amount is the balance on the credit card, and your payment is 1%. So I'm going to put in 1% of the outstanding balance. And you can see 1% is 185, and then your next balance is your previous month's loan minus what you paid. So your next balance is 18,355, and the next payment is going to be 1% of the outstanding loan. So 1% of this outstanding loan, you can see the payment decreases each month as the loan amount decreases. So I'm filling out this formula and I'll autofill the rest, but just wanted to illustrate kind of how this works. So again, 1% of the balance. So we've got enough data in here now that we can expand and autofill these columns. And I'm going all the way down to 300 months, which is 25 years. And I'm doing that because the system is under warranty for 25 years. So if something goes wrong, the panels are under warranty and they'll replace those or get the system back up and running. So as you can see, the loan amount decreases as time goes on, and the payment as a result also decreases. Now I mentioned every 21 months, in order to keep a 0% interest rate, we need to do a balance transfer, meaning we would take this amount and transfer it to a new credit card. So the 15,164 times a 3% balance transfer fee means that the new balance for this month would actually be 15,618. And the formula will account for the rest of that. So I'm going to do that each of these red months. So again, on month 44, after the second time, we'll take the 12,646 times 1.03. The balance is increasing each month, 13,025. And we plan to do this um, three times, the initial card and then three refis. So in this case, this new balance will be 1074, 10754, and the last time 8621 times 1.03 would be 8879. And I've marked this green because this most likely will be our break-even month, which we'll illustrate in a second here. So going back to the top, we've got our loan accounted for every 21 months doing a balance transfer. Solar payment will reduce as a result. And as mentioned, our electric bill with solar is $45. So I'll fill this all the way down. And our total payment then would be our credit card payment for the solar system plus the electric bill would be $230 the first month, $229 the second month. As you can see, this is going to go down as well because that balance is decreasing. So I'll expand this all the way down. And then finally, what we want to compare is the system saving or costing us more each month than what we were paying before, which was $130. So to calculate the difference, $130 minus our new payment, for example, this first month, I need to do this as a formula, so 130 minus this amount, this means our first month we're paying $230, whereas we could have just paid 130. So we're paying $100 more, meaning we're cash flow negative. It's costing us more money, right? So I'll expand these all the way down as well. And as you can see in the early months, we are cash flow negative, but in the bottom months, this is positive, meaning it's saving us money each month. So what's worth pointing out is not only do we have the system savings, but this tax credit up front. So yes, we have these months where we're paying more than we would have otherwise, but we also had this immediate savings up front of $5,500. So to compare, we'll sum all of these negative amounts. So how much more did we pay for the system before it started saving us money? So we'll take the sum of all of these months where we had a negative cash flow. So to here, we'll hit enter. And as you can see, if we scroll back here, I'm going to change this color because it's actually a little bit sooner than anticipated. So cash flow negative meaning the system cost more than our regular bill up until this point. So right here at month 93 and 93 months is 7 years, 9 months, right? Less than 8 years. At that point, because we have solar, even despite having a solar payment and a reduced electric bill, our total payment will be less than that $130 that it would have been otherwise. And keep in mind the system is under warranty for 25 years, so about 8 years, um, and then it's cash flow positive every year after that. But it doesn't mean we've lost money during the first 7 or 8 years, because if we look back at the top, we had this upfront cash deposit essentially, or savings. So 5,562 that we had immediate savings minus all of the excess cash flow months, we're still positive $1,604. And so we can say we truly got paid or had positive cash flow to buy the solar system. And over the life of the system, this should save us significantly because we will have 18 years of discounted solar or electricity. As you can see, all of these towards the bottom, the savings are significant every single month, on top of never having to pay out of pocket because our more expensive months were still less than the money that we started with based on the tax credit. So this is how and why we decided to buy a solar system for our roof. I do not recommend this strategy necessarily. There are definitely risks and some ins and outs with it or nuances. For example, the interest rate, 0% APR, may not be available on future credit cards. The term may be different. It may be only 12 instead of 21 months. If you miss a payment, then they can charge interest. So this is only a strategy that we are pursuing because we monitor things very closely and are willing to, refinance every 21 months essentially. But as we can see, it makes sense for us financially, and we're very satisfied with the system so far.